Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Monday, July 30th, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, a very light volume day today. Markets are basically pausing after two monumental rallies Thursday and Friday of last week on major rumors coming out of Europe. And again, we were looking at rumors that basically were in line with the Draghi intervention, who's the head of the ECB, and how that's going to play out, and they're going to rescue this and do that. And essentially, it just caused this monster rally to Thursday and Friday of last week. Now, today, you're just getting a pause as people are trying to digest. You have a little bit of profit taking going on. You can see that initially the markets popped up here and then came back in. One little note here that I want to just show you guys. Notice how you had a little bit of a breakout here. Technically, the amateur out there would think this was a breakout. Pros it in the money stocks that I train here, and you can come join us and I'll train you as well, would know this is not a breakout. Why? Because there's no confirmation. Just that simple, guys. Again, when you break above a key level like this, you must confirm. Now, many of you probably are watching saying, well, what the heck is confirmation? Well, frankly, I'm not going to reveal that in a free video, but if you come and join us and become part of the elite group here at In The Money Stocks as a Research Center member or an Intraday Stock Chat member, of course I will teach you these secrets. And again, a lot of proprietary analysis techniques that will basically ensure that you profit for life as a trader or as an investor or as a swing trader. Right, and again, there's a 7-day free trial here at InTheMoneyStocks.com. 7-day free trial to the Research Center, which is geared towards swing traders and investors, and the Intraday Stock Chat, which is obviously geared towards more the day trader. Now, the market here, you actually have a bearish pattern development. So again, you rallied up here, you didn't confirm, you sold off into the 50 MA and this little pivot low. And again, note the trend line and the low from Friday. That's what's held this market up. Now, as you go sideways, you're creating a down move, sideways move, which is considered an in spirit of bear flag. Now, generally, if we had normal volume in this market, this would play out to the downside and you'd actually see a nice little sell-off. Because the volume is so light, it means that the possibility of a down move is a little bit more limited. Could it happen? Yes, it absolutely could happen. But again, much, much more limited because of the light volume. Light volume always props the market up. Right, that's why during light volume moves, you generally will see the market go up. Around holidays, you see the markets go up because volume is lighter. In general, the markets float up in light volume. Now, it doesn't mean you can't play out a bear flag here. It just means, again, it's all about odds. Trading is all about odds. You know, how much can you put the odds in your favor? When we trade here at In The Money Stocks, when I train you guys, when I give you guys plays, the odds are in your favor 80% to 90% of the time. So 8 to 9 times out of every 10, you're going to win on a trade or a swing trade or an investment. When you're dealing with light volume here, the odds are obviously lower, probably about 6 to 4. So again, there's a 60% chance it plays out to a 40% chance that it doesn't. Those odds I'd never take. The amateur takes them. The retail investor takes odds like that. I, as a pro, would never endorse taking odds like that. You got to have it 80% or higher in my book. In any case, if it does break down here, what are you looking for? You're actually looking for a move all the way down to this white trend line. You have a little bit of an area right here as well, but somewhere in this vicinity is where you're looking for the move to take place. If it doesn't play out and you're able to recapture the 20 MA on a closing basis here on the SPY intraday, then you actually could trade back up to this pinkish line here, maybe even the highs of the day. All right, but bottom line is it looks like an inside day. Inside days are consolidation days off of it's just really people pausing, a little bit of profit taking, and inside days can often tell us that there's a little bit more upside coming in the markets. There's a possibility of that. All right, so we'll keep a close eye on that as well. Taking a look at some key stocks out there, Apple. Now, Apple had bad earnings early last week, but Thursday and Friday, well, really more Friday, Apple had a great move, and today it's having another very, very solid move, up another $11. The one thing I want to draw your attention to here is where the high of the day was on Apple. So here's your daily chart of Apple. Notice how this candle, see the red candle, the low area right here? If you take a line and draw that across, that's gap fill. Gap fill is a very important resistance level. In addition, the 20 MA is also there. So do you see how the 20 MA is coinciding with gap fill? Look at the high of Apple right there. That's your resistance line. That is the line to get through on Apple. It may not be able to get through there. My analysis shows me that when the markets turn down again, which they will do in time, and not too long actually, you will start to see some stocks that had missed earnings, that had fallen big, that have rallied back, those will be the first ones to get hammered. And I wouldn't be surprised if Apple's one of those. All right, so just keep that in mind. What other stocks out there are interesting? Let's take a look at JP Morgan because I think JP Morgan's a very important stock to look at today. JPM had many nice up days here, but today we're seeing a lot more weakness in JP Morgan Chase, a lot of weakness here. All right, and that's telling me personally that we have to be a little bit on par and cautious towards the end of this week because when JPM is a leading indicator. So again, this is telling me that as a leading indicator, the markets may not fall today or tomorrow or Wednesday, but by the end of this week, you want to be on a little bit more alert, assuming JP Morgan continues to show us overall weakness. All right, it worked perfectly over the last time. Here, the market was rallying up and JPM was selling off, and then we had that big dump, early last week and so forth. Then JPM started to turn around, and then late last week, Thursday, Friday, we got the pop in the market. So it's a perfect leading indicator. It seems to be leading by about 3 days, 3 trading days, a leading indicator. So it tells me, again, Wednesday, Thursday, we start to be on a little bit more of an alert, assuming JPM continues to be weak tomorrow and so forth. Okay? Goldman Sachs. Goldman Sachs is also down about 80 cents. Another amazing rally here. One thing to note on Goldman, guys, look at this. Isn't that cool? I mean, this is why trendline analysis is second to none. Connecting the highs, you got the exact high on Friday there, which told you you're going to pull back right there. Also, you want to see another awesome chart? Take a look at Google. All right, so the amateurs are looking at Google and saying, wow, this stock has had such a run. Where do I short it? Where do I go long? All you need to do is know what we do here and just connect the dots. Essentially, it's as easy as connecting the dots. Take the high from January, connect it to the high from March. Look at that. I told my guys in the chat room today, and many of them shorted Google right up here. And now, from the highs of the day, you're up over $10 on the short on Google. I mean, that's awesome. You just can't even, fathom that type of profit and just that high percentage. Such a high percentage short right there. And it's so obvious, too. I mean, just connect the dots. I mean, you just get that exact line. I had this we talked about this over the weekend even. I was looking at this over the weekend. That level was there even before the high of the day today went right up there. I mean, you knew that level was going to be, if it hits that level, that's the level, essentially. Okay? So stuff like that, it's just a genius way of handling the market. I don't know how anyone trades without the methodology here in themoneystocks.com. I couldn't do it. I would just not even invest, frankly, if I didn't know this stuff. If I know what I knew now, obviously. So I hope everyone out there decides to come and take the 7-day free trial. Have your eyes opened. Have your mind opened. And start just profiting. I mean, it seems so simple to say, but that's the beauty of it. I mean, it's really all about realizing how you can put the odds in your favor 80 to 90% of the time. I mean, those odds are unfathomable to most people out there. But to know that you can make money like that, to consistently make money, to know where to get in, to know where to get out, genius, pure genius. And we'll teach it all to you guys here at InTheMoneyStocks.com. All right, guys, I got to get back to trading. But again, come join us at InTheMoneyStocks.com. 7-day free trial, Research Center. Remember, Research Center is geared towards swing traders, investors. Intraday Stock Chat is for day traders. Take care. Have a great afternoon.